What's going on, buddy? It's Jeff here. Welcome back to the channel. All right, guys, FOMC minutes came out reiterating that there is not going to be any rate cuts that the Federal Reserve members can see as of now in 2023. Market, as you can see, is pretty sideways and choppy. So in this video, I want to talk about something that I had tweeted yesterday, talking about quality setups this year. Instead of buying whatever you think will go in the direction you want, focus on buying setups that give you a higher probability of going in your intended direction. Something that has been very profitable for me, it's something I've been following for quite some time, has been the 200 EMA retest on either the 3-minute or 5-minute charts. Okay, so the reason why I want to make this video, first of all, is because I continuously see retail traders leaving the trading space. Okay, we are not in the same market that we were in 2020 or 2021. The second reason is you continuously see people, some people inside the group, some people comments on Twitter, some people stock twits, wherever it might be, asking, where do we think it's going? Should I be getting into this? Should I be getting into that? And the thing is that even if you do get into something, because if you buy, if you're playing options, okay, you buy a call or a put, you really have a 50% chance, it's going to go in your direction. Obviously, certain setups and certain criteria may give those higher probabilities or lower probabilities. In the end, you have a 50% chance of that becoming profitable at some time, okay, on the bigger spectrum of things. But the point of the matter is, it's completely irrelevant whether you make money or not, right? Are you able to do this on a consistent, repeatable pattern over a longer period of time? And the answer most of the time is no. So what I want to share with everybody is one setup, okay, that obviously I've seen, okay, played numerous different times, all right, that I've gotten from other mentors over the years, that somebody can focus on and literally just look for that setup. Okay, so this was one that I shared inside the group from yesterday. It is the 200 EMA retest, and we'll talk about, obviously, in my videos I use Thinkorswim. I also use TradingView. It's a couple different reasons. It just gives a different visual, as well as the 200 EMA can actually be a little bit different, and I'll explain why in just a moment. But one of the plays I love is the 200 EMA retest, 3-minute or 5-minute chart. I will bounce back and forth just because they vary a little bit. What I like to see is a bit of a trend off of the open. Okay, so we were trending a little bit up pre-market, got some heavy rejection once we got to that 386 area at open, and an immediate downturn from 386 all the way down to 380. Had a little bit of a bounce, then that retest and a reject. I love playing this setup. Reason being is because, one, a lot of traders who have got in off of this 380 bounce are going to be targeting the 200 EMA, which is an indicator that is used very, very heavily, as well as other people looking for that continuation, like myself, are going to be adding on this. And you find this follow through occur more often than not. Another thing I really like about taking this place, I will average into it. I might buy my put option contracts, 1/3, 1/3, 1/3. If we get a close above this, I will, exit out of this trade, and it won't hurt me too bad. I'll be down generally anywhere between 15 and 20% on my contracts. I will play next day expiration most of the time, or maybe even 2 days out. I don't play 0 day. If you do play 0 day, you get a massive spike. You might be down a little bit more. That's just some of the risk, obviously, playing 0 day, but it won't hurt me too bad, okay? However, on the contrary, we went all the way down to 378. This trade net me about 72% overall. The contracts went as high as 120% because of the way I scale out of them and trying to hold my runners to give me, the highest probability of a maximum return. Obviously, I ended up getting out this massive green candle. I really thought we were going to spike back over 380 when we rejected it on the first time. I ended up getting out. The total trade net me 72%. Okay, meaning that even if this setup does not follow through the next time, or even the next 2 times, and I get burnt on the higher end and lose 20%, as long as I'm sizing appropriately and sizing the same when I'm playing this setup, it will still be profitable. And that's only just over the next 2 times. Maximize this over multiple time frames, and like I said, it can be very, very profitable. Let's just zoom out a little bit and look at, okay, what happened yesterday. All right, and the reason why I'm looking at this is because we're looking at the 3-minute. on TD Ameritrade, it shows a little bit different picture. The light blue is the 200 EMA, and we are further away from that. So you might ask yourself, well, why are you further away from that when it's showing on TD Ameritrade, versus TradingView? Reason being is because pre-market on TradingView starts at 7 a.m. Okay, and on TD Ameritrade, it starts at 4 a.m. for the normal stocks. When you're using the indices, this pretty much goes all night long. All right, so after the open, when you get to about 10:30, the 9 EMA and the 21 EMA, which are the other two that I use, aren't going to have any difference because obviously you have at least a 9 or 21 candles in that time frame when we get to here. But the 200, because it's over such a longer period of time, it will be weighted a little bit differently. Now, there are certain plays where you might look at this and say, okay, well, it's not happening obviously on TD Ameritrade, but it might be on TradingView. It's another reason why I use two different charting softwares. Okay, but if you aren't interested in using two different charting softwares, obviously you could just wait for this setup to happen on yours. Okay, so my point behind all of this is really not just a focus on this specific setup. It's to also be patient and disciplined and wait for a setup to happen. Okay, now a lot of people, you can see that excitement at the open. Are they getting into calls? Are they getting into puts? Rather than just being patient and disciplined and waiting for a setup that meets your criteria in order to enter, that gives you a higher probability. Now, if you were to just play this one setup, clearly looking at this chart as of today, it didn't happen. Well, not yet. Okay, it has not occurred. That same setup where we have a nice steady trend, then a retest of the 200 and continuation, has not happened. So therefore, today might be a day where you might stare and look at the charts, learn some different things, get some better feel for it, and not take any trades. And that's okay. Okay. And my reason being, like I said, behind all of this is to be patient and disciplined and wait for a setup that meets your criteria. It's going to give you a much better chance of being profitable in 2023, especially if 2022 has been a bit of a struggle for you. Okay. So, I also go through just inside this multiple different time frames of talking about this 200 EMA strategy. This is all the way back from November 9th. Obviously, this is showing still a 3-minute, chart back, okay, on TD Ameritrade where we had that rejection. Same thing. Like I said, you can go ahead and backtest this strategy. What do I mean by backtest? It means literally go up, look at the charts, and follow them. Look at these different tickers, your Apple, your Microsoft, your Netflix, whatever you want to be able to play, and to go back and look for this and take and write down on a piece of paper how many times, okay, that it has followed through, right? How many times as it came up, it's bounced off the CMA and it's followed through versus how many times it's broken through, okay? And over a longer period of time, you will see, you take a sample of 20, 30, 40, 50 times this occurs, you're going to see that this actually does happen more often than not. And because you are, in a way, following trend, okay, but you're also buying on a bit of a pullback, if you're playing options and it does go against you, you're not going to get burnt. That is called your risk reward. Your risk reward is very good when you are playing this. So guys, I hope this helps you. And more importantly, throughout this year, especially if last year has been a bit of a struggle, which it has been a struggle for a lot of people. It was a huge adaptation. Okay, for me, I remember going back into 2020, all the way even early 2021, I didn't play any options. I got away from them. It was small caps every single day. It seemed like you were getting 100% runners. You bought anything on support and there was like a 90% chance you were going to sell higher. It was a big adaptation. And anybody that tells you, it hasn't been, well, they might not fully being honest with you. But guys, I hope this helps you. That's it for this video. I'll see you in the next one.